Hello everyone and welcome back. In today's video, we're going to be comparing two of the most popular dividend ETFs, that is SCHD or the Schwab US Dividend Equity ETF and DGRO or the iShares Core Dividend Growth ETF. And now when it comes to either of these ETFs, they're both considered some of the best of the dividend ETFs. They're both included in the list of the best dividend ETFs of 2024. Now, these are among other ETFs, but as you can see, both SCHD and DGRO do come up often in some of the top dividend ETFs there are. But if you're a dividend investor, which one should you decide to invest in? Which one is better? In this video, we're going to be going over that. And before we get into it, if you do appreciate content like this, leave this video a like and subscribe for future content. Now, starting off with SCHD, we're going to go with the investment metrics first. The goal of the SCHD ETF is to track as closely as possible the total return of the Dow Jones US Dividend 100 Index. So a bit about how this index operates. It's designed to measure the performance of high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for their fundamental strength relative to their peers, and based on financial ratios. So some of the initial selection criteria: all index eligible stocks must have sustained at least 10 consecutive years of dividend payments, have a minimum float adjusted market capitalization of 500 million USD, and meet minimum liquidity criteria. So in other words, these are stocks that are frequently paying dividends. They do not stop paying dividends, and these are also generally large stocks. So then this list of stocks is further narrowed down using financial ratios. So the index components are then selected by evaluating the highest dividend yielding stocks based on 4 fundamental based characteristics: cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. So not only does it narrow down from dividend paying companies, but it also screens them further using financial ratios to pick the best of these dividend stocks. So in contrast, DGRO is a little bit different. The fund seeks to track the investment results of the Morningstar US Dividend Growth Index. And now this index is a dividend weighted index that seeks to measure the performance of US companies selected based on a consistent history of growing dividends. So both of these ETFs do focus on dividend paying companies, of course. So eligible companies must pay a qualified dividend, of course, must have at least 5 years of uninterrupted annual dividend growth, and their earnings payout ratio must be less than 75%. Companies that are in the top decile based on dividend yield are excluded from the underlying index prior to the dividend growth and payout screens. So in other words, these are not looking for really high yielding companies. These are selecting companies with 5 years of uninterrupted annual dividend growth. So they really want to screen for growing companies with their dividends. And they also don't want companies that are paying such a high dividend that they're actually going to be risking their cash flow and they are going to be having trouble paying that dividend. Now, when comparing the number of holdings, I think it's important to really hone in on that selection criteria. Because SCHD further screens for fundamentals, it also is going to give a bit of a difference in its number of holdings. So SCHD has 104 total holdings. In comparison, DGRO has 420 total holdings. So DGRO's selection method is a lot less strict or stringent than SCHD's. And SCHD is really going to have a more refined number of holdings than DGRO. So DGRO is going to have more holdings, whereas SCHD is going to have less holdings because this selection criteria varies between these ETFs. Now we're going to get into how these ETFs invest based on industry. So we have SCHD here, and then we have DGRO here. Now what I did was I put these holding by industries on this graph so we can look at them both at the same time. And what I want to point out first is that neither of these have real estate in their top 10 industries, and that's because both of these ETFs have a selection criteria that excludes real estate or REITs from their holdings. And when you look at both of these, they do have overall similar industries. Now, highlighting some key difference between these industries that these ETFs invest in. SCHD is much heavier on industrials than DGRO is, but DGRO is much more heavy on information technology than SCHD is. And SCHD is also a bit heavier on communication than DGRO is. And you're going to still see some differences here and there. But overall, for the remainder, a lot of these industry holdings are pretty similar in weights. Of course, you're going to see maybe a 2 to 3% difference, but really the main differences come in communication, information technology, and industrials for both. So now let's do a side-by-side comparison of the top 10 holdings of SCHD and DGRO. Now, what you'll find that some of these holdings are very similar, or they will be the same holding entirely. So, like for example, both hold Broadcom as the top holding, but it starts to move away from each other there. So Microsoft for DGRO is number 2, and you won't find Microsoft in the top 10 of SCHD. Apple is number 4, and you won't find Apple in the top 10 of SCHD. And I also want you to focus on the total weighting of the top 10 holdings. So for the total weighting of the top 10 holdings, it comprises 42% of the overall portfolio for SCHD, where for DGRO, it occupies 27.13% of the top 10 holdings for the entire ETF. Now, that is because of the number of holdings each ETF holds. Remember, SCHD has about 100 holdings, whereas DGRO has far many holdings. So, as expected, you're going to see less concentration in the top 10 for DGRO versus SCHD. SCHD is a much more concentrated ETF than DGRO. It focuses on a lot more narrow selection of stocks. Now, you do see, of course, high quality stocks in each, but again, you're just not going to hit all the points of DGRO. You're going to see a lot more of the overall market in DGRO compared to SCHD. So now this next part is really going to be for income investors. If you're investing into these ETFs for income, you are looking for yield. And SCHD currently has a yield of 3.48%. Whereas DGRO has a current yield of 2.43%. So SCHD does have a quite a bit higher yield than DGRO. So DGRO has more holdings overall, but SCHD does have far more in the terms of yield. And that simple fact is likely because of the industries that each ETF invests in. So DGRO, as stated before, does hold significantly more information technology, whereas SCHD does hold less. And you'll find that SCHD does tend to invest in industries at a higher percentage that do pay dividends or will pay higher dividend yield than DGRO does. So you're going to expect that variation in yield, of course, because if you're in an industry that does pay higher yields or selecting stocks in industries that pay higher yields, you're going to expect to, of course, get a higher yield from the ETF in the end. Now, when it comes to dividend growth, you're going to see both of these ETFs definitely do have great dividend growth, and they're both going to be over 10%. So these are both considered dividend growth ETFs. Both do pay a phenomenal growing dividend. So on screen here is the dividend for SCHD, the dividend growth for SCHD, and I'm also going to put that against the dividend growth of DGRO. So this is the dividend growth of DGRO. So as you can see, both ETFs do have some great years of dividend growth. And if you're looking for dividend growth, there isn't really anything wrong with either of these ETFs. Now, DGRO has an average growth for dividends of 10.18%, which is great, above 10%. But SCHD does have a better dividend growth rate at 13.05%. So SCHD beats out DGRO for yield, and it also beats it out for dividend growth. So just to recap a few things in case we're keeping score, and I think we are because we're comparing these ETFs. So for the number of holdings, DGRO beats out SCHD for sure. It holds at least 3 times as many holdings as SCHD. Now for the selection method, I am going to definitely give it to SCHD because it has a similar selection method to DGRO in that it invests in stocks that have a history of growing their dividends. But you also have to remember that it also filters these stocks through a series of financial ratios to pick the best of the best. I am going to give dividend yield to SCHD too because, of course, that dividend yield is currently higher, and it's probably going to remain higher because of the industries that it invests in. And we are going to also give the dividend growth to SCHD because it has a higher annual growth percentage rate. Of course, DGRO's is not bad either, but SCHD does come out on top. Now, let's get into performance. Let's do a historical analysis of how these ETFs compared against each other over time. Now, the history for DGRO is somewhat limited, so it isn't going to go back that far, but we are going to compare how these ETFs performed against each other over the past 10 years or so. And what I did was I invested $10,000. I did not contribute anything into it. And I also reinvested those dividends, of course, because that is how you compound your money. And I just compared the two. So this is going to go from January 2015 to December of 2023, limited because of the limited time that DGRO existed, of course. And we're going to quickly see that these ETFs compared and performed mostly in line with each other. Now, SCHD did come out on top by about $400, and it did have a slightly better compound annual growth rate. DGRO did have a worse year compared to SCHD, and DGRO had a slightly, very slightly best year compared to SCHD. So overall, though, these two ETFs did perform mostly in line, but SCHD did come out on top, as the numbers do say. Is this going to continue in the future? I don't know, but at least historically, we can say that SCHD did come out a bit on top. And there are periods, of course, where DGRO was performing better. So this might change a little bit. History tells us that SCHD is better, but the future might tell us that DGRO will come out on top. So I think that the fair way to put it would be that both of these ETFs are tied in that regard, at least for now. So now we're going to kind of conclude to determine which one is better. And of course, it does look like SCHD is coming out on top. Now, I do have to get a little bit of a kind disclosure here. I am a holder of SCHD. I do think it is the gold standard of dividend ETFs based on its selection criteria. And I hold about $16,650, which does boil down to about 216.5 shares. So I am a fan of SCHD, of course, and I do not hold any DGRO. Now, I do want to put a big caveat on that. If I do not hold DGRO, but I do hold a very similar ETF to DGRO, and that is the Vanguard Dividend Appreciation ETF. A lot of dividend investors try to compare SCHD to DGRO, and I think that's an unfair comparison. I think we should be comparing it to VIG. And with VIG, I do hold about $35,000 of that ETF, which equates to a little bit more than 200 shares. So I do hold an ETF that is more in line with DGRO rather than SCHD. Of course, I think SCHD is great for dividend investing, and I think DGRO is great for dividend investing, and you can compare it to VIG like I said. Now, when it comes to comparing the two, I think it's important to note that regarding dividends, I think SCHD is going to be better for the conventional dividend investor. Now, SCHD has a higher yield, it has a higher dividend growth rate, and I think as a dividend investor, if you just want to focus on those two things, then of course SCHD is going to come out on top. So I think if you're a dividend investor only and you really want income, SCHD is going to be that better choice. But if you are an overall market investor that does want to have a focus on dividends too, I think that DGRO will probably be the better bet long term, possibly in regard to growth, because it tracks a larger portion of the overall market. Of course, that diversity that this ETF has is much better than SCHD, as this ETF does have far more holdings. So if you kind of want to track more so of an overall market, go with DGRO and know that you will get a slant toward dividends. But if you do want to have a more dividend focused portfolio on itself, I would go with SCHD. So that is going to be the conclusion of today's video. I did hope you enjoyed this content. If you did, please leave a like and consider subscribing for future content. I hope that this video was informative, and I hope to see you in a later video.